Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 23rd of November, comes to you from London. And a lot of red on the screen this morning, more red than green, and that just tells you straight away that we're seeing a bit of a sell-off in markets before you even look at anything. The big thing that's happened overnight is this move on the US 10-year yield. And of course, Powell's been voted back in as chairman. There's lots of news flow, but the really interesting thing is we had this pullback and then a new push higher. And in fact, what I've done, I've marked this up to start with. We've got a new upside target to 2.1, 2.07. So let's say 2.1% on US 10-year bond yields. And so that's telling us that bond yields are going to go higher. And what's interesting is that pullback has produced that thrust. And what I've done here is I've basically put these columns here. So that one there with the downside target, that was the thrust down. And then we had a little mini up bit. Remember, point and figure charts don't take account of how long it takes. And then we had a further thrust lower. So that's then projected this move down to the bottom, and that low gave the opportunity for right on cloud support, by the way. That low gave the opportunity for buyers to come right the way back in, and that's given that new upward thrust target. That's there on the 0.5% chart. This is it on the 1% chart. Then a little mini pullback. And now we're just waiting for a move above that level there, and we can actually look at that level, a move above that level there, and we activate that upside target. So that's really quite key there. So US 10-year yields set to activate that upside target, and a lot of support on this chart. So really, really fascinating there. And you can put all these arrows and images on the chart just by going here with the drawing tools, and so you can choose to put text dots, dates, or arrows, and even images, and I'll show you one I've been playing with in a moment. So let's take a look at what's happening in the markets more broadly. Dollar continues to look very strong. We've had two very strong weeks there. Remember, this is weekly, daily, and 60-minute chart. If we're above the cloud, we're bullish. If we're below the cloud, we're bearish, and the corresponding upside target. So we're seeing the euro just coming up a little bit this morning, but still very bearish, and that breakthrough, the trend there, is a worrying factor for the euro. Sterling sitting at 133.80, still in a downtrend against the dollar on the medium and short-term charts. Downside targets here. Dollar has the upper hand. Against the euro, though, sterling is, of course, continuing to look stronger. Just falling a little bit below the cloud this morning with that stronger euro, but the trend is very much up. Bitcoin sitting at $56,500, just struggling to hold that $60,000 mark, but the $83,000 target is still very much in train. We saw the S&P down 0.33% last night. I am slightly concerned that we only have this upside target, all pointing to 6% higher, but we almost need a more sharp pullback to give us a new thrust, just like we've seen on that bond yield chart. So markets just edging higher, but struggling to have that real sort of pullback and then push to a new high, and that is just a little bit of a concern. We're seeing the future off another 0.33% this morning, the Nasdaq future off nearly 0.5%, and the VIX volatility back above 20 for the first time in a while. So we are just seeing markets just a little bit more fearful. This is the fear index, remember, a little bit more fearful than they have been. So quite interesting seeing that playing out. We're seeing the FTSE future down 0.7% this morning. The DAX in Germany down 1.4%. So really quite big sharp fall there. Coronavirus having a little bit of an effect as well, of course. We're seeing coronavirus taking hold across Europe. That's affecting European economies and starting to just create some fear in the markets there. And France is off 1.3%. So we're seeing that there. Tokyo was flat. The Hang Seng was down 1.2%. China was up slightly. India was also up 0.5%, had a very big fall the day before, of course, and the Aussie market was up 0.75%. So overall, Asia showing a pretty mixed picture, but Europe selling off this morning quite significantly. We'll take a look at the energy mix in a minute. Wheat just pulling back 0.5%, still looking very strong on those long-term targets. Gold really back, pulling all the way back to this $1,800 mark, and I've said before, above 1,800 I'm bullish, below 1,800 I'm bearish. It's kind of the level that we really need to hold. So it'd be interesting to see. We had that downside target of 1,807. That's where we went to. We've got targets in both directions. The main thing is on that long-term chart that we don't activate these downside targets. Neither of them are activated. We need to move to a new high really to activate that upside target. So we're still in the bullish trend, but quite a pullback there for gold. Palladium actually slightly higher, but this has looked pretty weak over the last several months. We talked about US 10-year yields, of course. 30-year bond yields just nudging that 2% mark already. And we have got targets here now to 212 on the short term, 2.5% if we go higher than 2.04, and then 3% if we go higher than 2.2, let's say. So it very much in train. And if we look at the German Bund, this is the level that we really need to watch on the Bund, is that we don't go below that 167.50. That's the Bund future in Germany. Taking a look at Brent Crude, in fact, we were neutral pretty much across the board this morning on energy, which is very unusual. But it's just really, we've had big moves to the upside and downside on various commodities, and they're all showing mixed targets just for today. So, of course, we've given key levels. Crude oil does look a little bit bearish. If we break below that 78 level, that would be bad for crude, and that looks like where we're heading. We're below the cloud. We've got downside targets more than we have got upside targets, and the trends are lower. Remembering this is my daily and my 60 minutes, so medium term, short term, daily, 60 minute, 1 minute. So I've got medium term, short term, and very short term. This is what we use for making our calls for the day. Looking at US nat gas, we fell away heavily yesterday as we predicted. We're seeing a little bit of a relief rally this morning, so we're neutral there as well. Emissions just struggling to hold 70, and again we went out neutral to clients. We gave all the key levels in our report out earlier to clients. We're seeing a bounce in gas prices. They fell heavily on Friday, of course. We're down further yesterday. This will give us a little buying thrust, this recovery here. So the key thing for us is we don't call it the wrong way. So we just felt it was too difficult to say which way we're going to go today across the day. But we felt that the falls were probably done after the last couple of days, and the same is true of TTF, of course. We had mixed targets when we did the call this morning. We're starting to just look a little bit better on the upside. Keep an eye on those charts, and remember to play with those box sizes. If we break above 87.50, then that would be good, and that's what we're watching for. German power is up 1% this morning, but again, a shortage of targets, and you will have better targets on your OTC data. Yesterday, we saw Nordic power jump 9%, and we called that bullish yesterday, so good to see that move. Remembering, I talked about that you could put images on your chart. This is one I've been playing with this morning. This is the rearing horse pattern. It's basically interesting to see. This is German power. The shape is similar for most of the European equities, most of the European energy markets. And this pullback, and then this move to a lower high. Will we follow the who's down here? It's unlikely that we're going to move to a new high, not impossible, because normally that would happen quite quickly. So this high is sort of the beginnings of catastrophic failure, and of course, given a year ago, we were much lower prices. So don't be surprised to see this sort of breakdown pattern following this horse, and of course the rearing horse will only eventually fall back to the ground. So interesting to see. It would be interesting to just watch this, but it just was an idea of I was playing with this morning, and great, you can just put these images on the charts in Updata, and again you do that in the drawing tools, and you can just add lots of different images that are already pre-done, or you add your own custom one, which I just did. That's it for today. Until tomorrow, watch the horse. Happy charting. Bye for now.